Some are saying that there's too many paradoxes in the Nigerian market, for instance. The market generally up for the year 2011, but down for the month. Retail, local investors not active in the market, foreign investors active in the market. How do you explain what's going on?
Well, I think that the paradox is there, as you say. There's a wait and see by many of the segments. I mean, and in some of the segments, you have had people lose their savings, so they're not playing in the market anymore. That's for the retail investors. Now, for the local institutional investors, there is the challenge of what kind of return they can make. And don't forget that they're restricted for the pension funds, 20% in the equities market. Now, that's a very competitive market, and if the market continues to seesaw, it's difficult to say how they'll place their bets, as well as the fact that the fixed income market is very attractive now. The federal government bonds now give about 12%. So where will they swing? They probably will stay with the fixed income markets rather than the equities markets. The foreign investors are waiting to see just how the new government will shape out.
What's taking so long in terms of making that decision?
I really wish I knew. I think that there are lots of political calculations going on, you know, and it's a very rich and diverse country, you know, so these things usually take this time, but it will be out before long.
And is it expected to have any further drag on the market?
Well, you know that all markets around the world are driven by enthusiasm, and there has to be something that gives that impetus. And if you recognize that the operative word of this government is transformation, people are just waiting on the sidelines, foreign investors, local investors, to see just how much transformation the Jonathan government really means. And if they feel that the cabinet presents that transformation they're looking for, there'll be enthusiasm and it will filter into the market. We'll find a significant boost.
I mean, you referred earlier on to sort of the wait-and-see approach for many value investors, as well as some regulatory issues on investment caps for pension funds. I mean, beyond going into what's needed at a regulatory level to change things, what else could be making pension funds tentative?
Well, I think that it's really the dynamics of the markets. The equities market does give the pension funds the boost that they're looking for to improve their return profile, but then they're restricted 20%. Now, in that 20%, you find out that the market has been largely flat all year. I mean, you just said in your introduction, the market has done only 1%. As of yesterday, it had done only 1.4% on the year, and the month has been down 2.17%. You know, so the fund managers are trying to lay their bets, and they're trying to find out just which direction do they go. They'll be tentative, as well as the fact that most of the companies that are quoted on the market do not offer them anything new. They need new listings, they need new products. And I think that with new listings, it offers them the capacity for perhaps improved return. We need to see them come to other sectors, perhaps the telecom sector, perhaps the downstream petroleum.
Right. You know, in the absence of these new listings, there is a trend that we're seeing where many investors are now looking into lower cap stocks because at least their prices haven't shifted significantly in terms of what we're seeing in other tiers. For you, what would be a buy in this end of the market?
Well, I have a curious selection. I have looked at a bank called Sterling Bank, and I think that would ring, there will be resonance in that with you, because there's a first round had gone into discussions with Sterling Bank. I think Sterling Bank is a small bank. It's cleaned up all its bad loans, and it has significant focus on its business. Now, for me, I think that Sterling Bank could decline. From what we hear, the offer by First Round means that they see their future a lot brighter than First Round would offer. And I think that the fundamentals of Sterling Bank are strong. And there's an insurance company called Custodian and Allied. That's also a very strong company.
All right, sector-wise, where would you be going? I know the banks arouse and elicit a lot of interest, but also we've seen some of the consumer goods companies doing fairly well.
Yes, consumer goods doing well, but you have to be very selective. I'd look at the direction of Nestle. I'd look in the direction of Unilever. And I think that Cadbury, even though it's down, has also cleaned up its bad asset position, and it does have a good chance because of its global strength. So one would be looking in that direction as well as the Dangote behemoths, sugar and flour.